Ever get that feeling when something sounds a little too good to be true? Like maybe there's some hidden catch?
Oh, absolutely, especially with those online Forex bonus offers.
Yeah, exactly. And that's what we're diving into today. Monaxa's 30% deposit bonus. We've got their terms and conditions right here from monaxa.com, so let's break it down.
Always good to read the fine print, right?
For sure. So, who can actually claim this bonus and how does it all work?
Well, it's open to new clients, which makes sense.
Welcome, Matt.
Yeah, you could say that.
Yeah.
But it's also offered to existing clients, but only those who haven't funded their accounts yet.
Interesting. So, trying to entice inactive clients back?
Seems like it. Now, to qualify, you'll need to make a minimum deposit of $1,000.
Okay, a decent chunk of change.
And here's the catch. It has to be a single transaction into a specific account, an MT4/MT5 bonus account.
So you can't just add it to your existing account. What happens if someone accidentally puts it in the wrong account?
That's a good question, and honestly, the terms aren't crystal clear on that. They stress that the bonus is only for deposits made to this specific account, so definitely double check before hitting that confirm button.
Makes sense. So let's say everything goes smoothly. What's the maximum bonus a trader could get?
It's capped at $300. So even if you deposit more than the $1,000 minimum, you'll only get that $300 max.
Good to know. And is the bonus credited instantly once you make that deposit?
Yep, they say it's credited right away after a successful deposit.
Okay, so far so good. But I have a hunch things are going to get a bit more interesting when we start talking about withdrawals. So before the break, we started to uncover some of the fine print around withdrawing funds. I have a feeling it's not as simple as just cashing out whenever you feel like it, right?
You're right, there are definitely some strings attached. While you can withdraw profits you make while using the bonus, it's super important to understand how those withdrawals affect the bonus itself.
Okay, so let's unpack that. What's the catch?
Well, the bonus is subject to what they call a proportional deduction. Basically, that means the amount you withdraw directly impacts how much of the bonus you get to keep.
So give me an example of how that works.
Sure. Let's say you make a $500 profit and decide to withdraw half of that, so $250. Monaxa would then deduct 50% of your bonus.
So you'd lose $150 of that initial $300 bonus.
Exactly. And here's the kicker. If you decide to go all in and withdraw your entire account balance, including the original deposit, you say goodbye to the entire bonus, all $300.
Wow, that's a pretty big deal for anyone thinking about taking this offer. It almost feels like Monaxa is incentivizing traders to stick around and actually use that bonus to grow their accounts over time.
It definitely seems that way, right?
Yeah.
This isn't just a quick cash grab. It's about integrating the bonus into a longer-term trading strategy.
So it's not enough to know the bonus exists. You have to understand how it actually works in practice and whether it fits with your overall trading style.
Absolutely. And speaking of aligning with your trading strategy, there are a couple of other clauses that we need to dive into that might not be so obvious at first glance.
Ooh, I love a good hidden clause expose. What else do our listeners need to know about Monaxa's bonus terms?
Two biggies: the stop-out level and the leverage tiers. And both of these really come down to risk management.
Right, and this can sound like pretty technical terms for some people. Can you break it down for us?
Of course. So the stop-out level is basically a safety net for your account. It's the percentage of loss your account can handle before Monaxa automatically closes your trades to prevent you from losing even more. Now, with this specific bonus, that stop-out level is set at 50%.
50%. That sounds way different from what I'm used to seeing in the market.
You're right. 50% is quite a bit lower than the industry standard, which is usually more like 100% or even higher.
Yeah.
This means that with this bonus offer, you have a much smaller margin for error before those automatic closures kick in.
So it seems like Monaxa is tightening the reins a bit to compensate for that 30% bonus they're offering, which makes sense from their perspective, but it definitely highlights the need for traders to be extra careful with their trades.
I agree. It really underscores the point that this bonus isn't a free pass to make risky moves. Now, on to those leverage tiers.
Yes. This is where things start to get interesting.
For sure. So Monaxa has this tiered system where the leverage you get is based on how much equity you have in your account. For accounts under $5,000, which is everyone who qualifies for the bonus, by the way, the maximum leverage you can get is capped at 1.500.
Just for our listeners who might not be familiar with trading on leverage, can you explain what that actually means in real-world terms?
Essentially, leverage is like a multiplier for your trades. So with 1.500 leverage, you're essentially controlling a trade that's 500 times bigger than your actual capital.
That sounds like a recipe for disaster if things go south.
It can be. While high leverage can amplify your profits if the market moves in your favor, even a small move against you can wipe out a significant chunk of your account. It's a high-risk, high-reward kind of game.
Right, a slippery slope, especially for someone new to the world of Forex. Do those leverage tiers change at all as your account balance grows?
Yeah, they do adjust a bit. So for accounts between $5,000 and $20,000 in equity, the maximum leverage drops down to 1.20.
Still pretty high leverage, though.
It is. And then, if your account equity goes above $20,000, the leverage decreases again to 1.10.
So it's like they're enticing traders with that possibility of super high leverage initially, but then they're also putting the brakes on a bit as your account grows. Pretty interesting strategy, actually.
Okay, so before the break, we were really getting into the nitty-gritty of Monaxa's stop-out levels and those leverage tiers. Definitely some things to think about before jumping into this bonus offer.
No doubt about it. Those details can make a big difference in your trading. And speaking of important details, there's one more area we need to touch on, and that's Monaxa's rules around what they call suspicious behavior.
Yeah, that phrase always makes me a little wary. It's one thing to have terms and conditions. It's another when they're a little vague. So what exactly does Monaxa consider suspicious? Well, that's part of the problem. The terms themselves are kind of open-ended. They throw out terms like arbitrage, high-frequency trading, even using multiple accounts to take advantage of the bonus.
Okay, so on the surface, those sound like reasonable things for a broker to want to prevent, but as you said, it's the lack of specifics that's a bit worrisome.
Right, like they don't say what exactly counts as high-frequency trading in their book. Is it a certain number of trades per day, per week, and what constitutes taking advantage of the bonus? Without clear definitions, it's really open to interpretation and potentially to disputes.
So a trader might think they're doing everything by the book, while Monaxa could see things totally differently and flag it as suspicious.
Exactly. And that's the danger of these broad terms. It puts traders in a tough spot.
So what are the possible consequences if Monaxa does decide that a trader's behavior is suspicious?
Well, they have a few options at their disposal. They can cancel the bonus, they can take back any profits you made while using the bonus, or in some cases, they can even shut down your entire account.
Okay, so the stakes are pretty high. It's not just about losing the bonus. It could mean losing your entire trading account.
Absolutely. Which is why it's so important to be aware of these terms and to really understand what you're getting into before you accept the bonus. If anything seems unclear, it's always best to reach out to Monaxa directly and ask for clarification.
Better safe than sorry, right? Now, let's say a trader does end up having a dispute with Monaxa about their account. What kind of recourse do they have? What are their options?
Unfortunately, this is where things get even trickier. The terms and conditions are very clear that Monaxa has the final say in any disputes. Their decision is final and binding.
So there's not much room for negotiation.
Not really. And while this isn't that uncommon in the Forex world, it's definitely something that traders should be aware of from the get-go.
Well, we've covered a lot of ground today, haven't we? We've seen both the good and the not-so-good sides of Monaxa's 30% deposit bonus.
It's a perfect example of why it's crucial to look beyond those flashy bonus offers and really understand what you're signing up for. Like we've been saying, there's no such thing as a free lunch in Forex trading.
That's for sure. So for our listeners out there who are considering this bonus or any Forex bonus, really, what's the most important thing they should take away from our conversation?
I think it boils down to this. Information is key. Don't let that big percentage sign blind you to the details. Read those terms and conditions carefully. Really understand them. Be honest with yourself about your risk tolerance. And most importantly, make sure that this offer truly fits with your personal trading goals and your strategy.
Excellent advice. There are so many different ways to approach Forex trading, and finding the right path for you is what matters most. A huge thank you to you for walking us through this deep dive. It's been incredibly insightful. And to all our listeners, thank you for tuning in. Until next time, happy trading.